the online forex trading space, I've got a bunch of assumptions and questions and myths that I would like for you to debunk. The first one is based off of a conversation we're having before the break, that on average you get between 2% and
2 to 6% a month on your capital.
Oh yeah, a month on your capital. Yeah. But I did read a story about a woman who who had put in 200,000 shillings, made that 200,000 shillings back within 24 hours. So she was now standing at 400,000.
Okay.
But then she went to sleep, woke up the next morning, poof, it was all gone. So how does it, I mean, I thought it was only 2 to 6%. How is it that you can make double your money?
No, when you talk about 2 to 6%, we're talking about disciplined trading.
Okay.
And therefore, if you have 200,000 Kenya shillings, it means you have, actually before you even start trading, you have a predetermined plan.
Okay.
And so I won't place more than 2 positions. And in these 2 positions, I'm not going to risk more than 5% of my capital. Okay? So as I go to sleep, I know in my mind, in these 2 trades that are running, I've only risked 5%. And there are parameters to set that you can't go, you can lose beyond that. That's a discipline.
But you also can't make beyond 5%. Is that how it works?
No, really. There's a limit of the loss, and there's where you set the target of what you're targeting to make.
Okay.
Normally, the rule is if you if you're risking 2%, make sure what you're targeting is double. That is 4%, or 6%.
Okay.
Risk reward. We call it risk reward.
Okay.
And therefore, if you're following these rules to set up your risk reward, then there's no way you can make 200 or double your money in a night, because this amount that you're risking of 2% is very little to double your account. But then again, your money is safe.
Right.
You get. So it's a discipline. But if you're greedy, there are parameters that you can ignore to use these parameters.
Yeah.
You can ignore to use them because you think you can double your account.
Right.
So this is what we teach about risk control, about the right psychology. Stick to the rules. Let's teach you the rules. Don't double it, but make a little over time. Just grow the money. Okay. Yeah.
All right. Yeah. Another assumption we came across: forex trading is a lot like gambling.
No.
No. You're not gambling.
No.
But gambling does have those 2 emotions: fear and greed. No?
If you ask me, every business has. Every business has. Because if today I wanted to start a restaurant business, I need to. Did you know that they actually do the maths of the salt, the gas they use to cook the meal?
Yeah.
Every tiny detail.
Yeah.
If you don't have that detail and you're going into the restaurant business, you're not going to hack it.
Right.
You get? And so every business has its share of risk. What you need is the right information. Do your research. If you need a course, take it. Just master what you're getting into, learn the disciplines, learn the risks, and then learn to control the risks.
Okay.
Yeah.
Okay.
That's the point.
So it's not the same as gambling.
No, it's not the same as gambling.
Okay.
But if you want to make it gambling, it's gonna be gambling. If you don't control your risk, it's gonna be gambling for you.
Where you can win it all or lose it all. Yeah. So another one: online forex trading is related to cryptocurrency.
It's a bit of a tricky one, because cryptocurrency is a class of currency that traded in the forex market.
What? Wait, I thought you were going to say for sure it's not. Because from like the little I've learned about cryptocurrency, it's like a whole other world.
As the term called it, it's currency. It's just a class of currencies. It's a new class of currencies called cryptocurrencies.
Right. That's different from the traditional
understanding
of like actual money,
the actual money and everything.
Or even gold.
Yeah.
So I thought it was different. But you're saying
it's traded in the forex markets. But if you wanted my advice, we don't teach people on cryptocurrencies, and we don't advise our students to, unless you really want. But we have our reasons for not trading cryptocurrencies.
Okay.
Because the thing is, we feel that, cryptocurrencies only came to the market the other day.
Yeah.
It's less than 15.
4 years.
No, it's actually about 10 years. We just
Oh,
got to learn about it
heard about
the
it
other day. We just got to learn it about the other day. And therefore, you know, when you talk about price action, you talk about going back into the days,
Yeah.
trying to analyze what the trend of this market over the last 30, 40 years. Cryptocurrencies doesn't have that long of a track trend to analyze it. And therefore, and then the volatility is crazy, because 1 minute is gonna shoot up, the other minute, tomorrow you're waking up, it's on the down low, because
Isn't
there's
that
not
what you said? Didn't you say volatility is good in
volatility
this space?
is good.
Yeah.
Crazy crypto volatility is not good.
It's on another level.
Yeah, it's on another level. And therefore we feel like it's not stable yet.
Really?
You know, when we talk about the US dollar,
yeah,
we use the US dollars here in Kenya. South Africa use US dollars. It's used globally,
everywhere.
and therefore it's very stable. It's very stable,
Yeah.
unlike the cryptocurrency that came the other day. And
so again, I don't know much about it, but from the little I've understood,
Yeah.
it seems like because it's finite, I think there's only, I can't remember the exact number. I want to say it was something like 21 million of the cryptos. I don't even know what the lingo is.
Yeah.
But because of that, because it's finite, and because it's systems and computers that are coming up with this currency, it's not a man, it's not a government.
It's mining,
Yeah, they're being mined.
They're being mined.
Isn't that more stable than a space where you know that there's a max, you know there's only this number of currencies that are going to be in the market, as opposed to the U.S. government, which they can decide, let's just throw in another, I don't know how it works, $100 million into the market, or let's put in, because that's not regulated. The government can just
that's
decide.
I think actually on the flip side, that's the beauty of it. The fact that it's not regulated and it's traded globally, then it means no one economy can control it.
Okay.
Because the amount of dollars circulating in the world every day is enormous. So no one country can come up with a policy that's gonna limit the forex markets.
Okay.
You get, because every day $5.3 trillion are exchanged in the forex markets. No one economy, no one company, no one individual, no matter how rich you are, you can control this.
But then it doesn't.
We're talking about $5 trillion every day circulating in the forex
And
markets.
what gives it that value then? Where does the value come from? If it can just be flooded into the market, where does the value come? Unlike something like gold or oil, which we know has an ending, and doesn't that give things value? More value? Even life itself becomes more value. I think we're going into a whole deep world of like cryptocurrency. I don't know where we're going with this. This is probably a different conversation we ought to have. But I'm so curious to understand that world. But I do have a few more assumptions.
But it's basically a world of buyers and sellers coming together. It's a marketplace. View it like a marketplace. See how you go, one person comes with the vegetables, the other one comes with the cereals, and then you do the exchange. It's the same for forex markets. But it's a global market meetup, whereby I come with my $10,000, you come with your $20,000, and then we meet on the markets, and then I'm gonna buy, you're gonna sell, and it's that kind of market. If without even dwelling too deep into it, that's how the market is set up. It's a marketplace where everybody comes up with their capital, and then we buy and sell. We buy and sell.
Another fact here statement I want to throw at you. Trading in more currencies at once is better and is good and has better returns than just dealing with one or two.
Dealing with one currency.
Well,
it's partly true.
Partly
true, because what we do is we have an array of currency pairs which we analyze. And therefore, which means if today I wake up and I'm screening through the charts and I have about 7 or 8 currency pairs open, it means I'm able to get opportunities in, if I don't get an opportunity in the pair of the pound and dollar, then I can look for opportunity in another pair. And so if I have more arrays of currency pairs, then it means I can screen for more opportunities. But again, on that point, it's usually advice, don't jump from one currency to the next. Have a list of maybe 7 to 10 pairs that you analyze consistently every
Okay.
day. Just look for opportunities in these pairs
Yeah.
every day.
Yeah.
That way you get to learn and master the movements of these pairs.
Right.
Yeah.
What are the ones that you gravitate towards mostly?
I love the gold. I love the
Okay.
gold and the dollar.
Okay.
I love the pound.
Okay.
I mean, for me, it's not really even about loving it. It's about just pairs that I've been analyzing throughout time. And so what I'm looking for is opportunities. I don't want to be attached to them. I want opportunities to make me some money.
Right.
But I have pairs that I analyze every day.
Okay.
About 8 pairs.
Oh, okay.
Yeah.
All right.
Yeah.
Another one, I have to be incredibly intelligent in order to step into the world of forex trading.
Not
Like you have
true.
to be genius level because it's
Not true.
No.
Not true. There's an interesting experiment that was done by two gentlemen,
Okay.
William and Edward, back in the day, about 20 years ago. It was called the turtle experiment. And so one of them argued that forex is an inborn talent that you need to be born with in order to make money from the forex markets.
Okay.
The other gentleman argued that and said that no, you can actually train a random individual of this skill
Yeah.
and they can get to make money. And so these two people decided to actually do it.
Yeah.
So William went ahead and handpicked several individuals from different industries, picked a chef, picked a farmer, picked an accountant, about seven different worlds.
Yeah.
You know, picking different people from different worlds, and
Yeah.
then put them in a classroom, trained them for, I think it was 90 days.
Okay.
Yeah. And then those people went ahead to make the greatest money managers in the world.
Oh, really?
Go look for it, the turtle experiment. And so it's not an
Okay.
inborn trait. Anybody can learn it.
Yeah.
And if you look closely, everybody is in the finance industry. If you
Right.
have a loan, if you manage a small business, you know, if you have a bank account, you're already in the finance industry. So anybody can do it. You don't. It's not an inborn, you know, talent and kind of thing.
Oh, that's
Yeah.
encouraging.
Yeah.
Another statement here. If I am smart enough, I can get rich very quickly investing in forex trading.
No.
That's the only question, the only statement that you've had one answer,
Yeah,
one word
yeah,
answer.
yeah. It doesn't
No,
matter. It
I
doesn't.
know.
Yeah, it doesn't matter how smart you are.
Okay.
It doesn't matter how good you are. If you're good, then you're able to make money consistently. But you can't magnify your small capital and double it in a month or two just because you're so good at
Okay,
it. Yeah. So
okay.
the discipline comes in hand because
Okay.
you know, if you're controlling your risk to 2% but trade at 1%, then it means it's only so much you can make, right? So if you're following the discipline and you're here for the long term, then it's not possible no matter how good you are.
Okay.
And therefore, unless you have a significant big capital, then you can make a good profit
Right.
and grow it over time.
Okay.
But making money overnight, no.
No. Millionaires, overnight millionaires, this is not the place, everybody. All right, so just as we wrap this up, I want to see if I got it right. The determining factors as to how successful you can be in this space.
Yeah.
1, discipline.
Discipline.
2, ability to manage your emotions. That's greed and fear.
Yeah.
3,
The skill
an
itself.
understanding of
The
the
markets,
charts
yeah.
and how to read them. And
Yeah, sure.
any-
And that's what we teach at our company, 4th Street Consultants.
Okay.
We run an online course because we recorded online videos and classes and theory broken down in layman terms to empower people on these skills. And even to add on that, for our students who take up the course, we offer one-on-one consultation. For instance, if you took the course today and you're going through the course on your own, on your laptop or iPad, even on phone, and there are a few you know, items you don't understand, you can always call and say, I'm your student, I want to come tomorrow for one-on-one consultation with a trader. We're located at Karen, and so we offer one-on-one consultation for guys who take our course to just
Alright.
mentor them
Yeah.
through the, you know,
And guide them.
And so we offer that on top of, you know, the online forex course
Okay.
that's available on our website.
Okay,
Yeah.
well, thank you so much, Joshua.
Thank you.
This has been such an eye-opening interview, and that's why I love this show too. That I get to step into a world that is completely different from everything
Yeah,
I know and I'm used to.
Yeah.
But I leave here the wiser, and I hope that you leave here the wiser too, and that
Yeah.
you learned a thing or two about forex trading. And it seems like it's it's like you said, I think you even touched on this. It's not even just about managing money and assets, but it's also about being able to control your emotions.
Your emotions,
That's
very
really
much.
cool. I
Every
love
day.
that.
I get to do that every day. I
Yeah.
get to control my fear and my greed every day. And it builds me as, you know.
That sounds
as an
incredible. All right. Thank you so much for watching, everybody. And thank you to Pumpkin by Radisson. We'll be back here, same time, same place, same station. See you then. All right, everybody. Have a great rest of the day. And remember, manage those two, fear and greed. Fear and greed. Bye, everybody.